Shadow of Truth, and today is Thursday, November the 17th, 2016, and your hosts are Rory Hall from thedailycoin.org and Dave Kranzler from investmentresearchdynamics.com. What's going on, Dave?
Well, it's finally starting to look a little bit like winter here. We got over 80 degrees here yesterday.
That's where we're headed to today.
Wow. So, the weather, it's more conducive to working when the weather sucks.
It really doesn't affect me since I'm indoors, so.
Yeah, but if I see a bright sunny sky outside, I don't want to be inside. So it's distracting.
That is very true.
So I heard you wanted to talk about gold this morning.
Gold. I love gold. I am loving this new price that they're putting on gold. I like it. Hopefully,
well, apparently so do the Indians, Chinese, and Vietnamese.
They're buying it up like there's no tomorrow. And
yeah, well, part of it has to do with the getting rid of the high denomination cash. Well, high denomination for India.
Yes.
Cash bills over there.
Yeah, the rupee 500 and the rupee 1,000 banknotes. And
yes.
And they're saying that that's for anti-corruption and anti-terrorism. So if you can fund corruption and terrorism with $7 US and $15 US, then that's frightening. I mean, because seriously, I mean, that's just ridiculous that for that to be the reasoning behind it, or part of the reasoning behind it. I mean, but the good news is that they are, and I'm sure that they figured that some people would be converting those notes into gold, but I don't think that they anticipated what's been happening over the past few days, because they've been losing their mind, basically getting as much gold as they can, converting all of those 500 and 1,000 rupee notes into physical gold.
Well, the ex-duty import premiums over there hit, and now this was 2 nights ago, hit $76 over world spot. So that means if you take world spot, gross it up 10% for the import duty that they charge, and then add another $76. That's what the price they're paying for gold in India.
That's about $200 roughly, two and a quarter.
Yep.
Wow.
And I happened to notice today that the spot premium in Vietnam, I believe, is the 5th largest world importing country in the world. Most people aren't aware of that because you don't think about Vietnam and gold. But they're basically the same way. They take all their the Vietnamese currency is called the dong.
Yeah.
And they take their dongs and convert it into gold.
Mm-hmm. Yeah, and the Shanghai Gold Exchange was reporting on the fix yesterday, the AM fix, they were reporting almost a $9 premium to physical over the LBMA and COMEX, and then at the PM fix, it had risen to right at $12. Might have been
$12.59 is where it was.
$12.59.
Yes.
That's, I mean, and what you were saying a couple weeks ago, that's a huge difference.
This was John Brimlow's remark on that. The high premiums probably reflect capacity constraints among Chinese import dealers. And then there's also the devaluation effect, because they've been devaluing the yuan for the last week, boosting the local appetite, and also lower price.
Well, they like lower prices.
Oh, and that's the thing. I mean, when gold starts getting hit like this, all of a sudden you see the peanut gallery coming out of the woodwork calling for 1,050 gold. I can't tell you how many articles I've come across my screen where the author was predicting 1050 gold. I saw one for 1040 gold. I mean, Why not 1039? No, dude, you're wrong. Not 1040. It's going to 1039. What they don't take into account is the Eastern Hemisphere component, the physical buying world, and that's what keeps a floor under this thing.
So they're probably not going to be able to get it. They may be able to take it back to that low of 1170 or whatever it was last December, but chances are they're going to probably stay away from that.
Well, our friend Eric Dubin called a double bottom earlier this week, and it's funny because before he sent us a link to his article, I was thinking the same thing. I think, and part of it is the action in the mining stocks, especially the juniors. I mean, and then one of my subscribers, who's pretty well thought out and has a lot of money invested in the sector, sent me an email yesterday and said that he thought the sell-off is over. So, I mean, right now the physical market is supporting the lows that we've seen, and we've bounced off those lows. And I think we're going to be headed higher, and I think it's going to take a lot of people by surprise. And I said the same thing after we had that bounce in December that was called a bounce. And into early to mid-January, I said, I think it's going to move higher and it's going to take a lot of people by surprise. And even long-time gold, I just call them gold bugs, thought that we were going to still go a lot lower. But I don't think we are. And Craig Hemke, a.k.a. Turd Ferguson, published a piece where he said he thinks the yen is oversold now, which it is, and when the yen reverses, it seems like more often than not that gold and the direction of the yen versus the dollar are correlated. So when the yen goes down against the dollar, which it has, and really hasn't gone down that much versus where it was at the beginning of the year. At the beginning of the year, it was like at 120, and it went down to 100, and now it bounced up to 109. So it's not even a 50% retrace. But I created a 5-year weekly chart of the dollar yen, and it's popped up to resistance, and on a weekly basis, it's extremely overbought, or the yen's oversold. The dollar's overbought versus the yen, and it looks like it could be forming a head and shoulders on the weekly. So at some point, all these treasuries that Asia is dumping, and actually Saudi Arabia is dumping them now too. At some point, all these treasuries that the big holders are starting to dump, that's going to come back and torpedo the dollar.
Yeah, I mean, it has to. I mean, all of these, aside from everything that you just described, I mean, we already know that there are major shifts away from the dollar and away from the Treasury. All that stuff's got to come back. It's got to go somewhere, because it's certainly leaving the balance sheets of countries around the world. I mean, they're unnecessary at this point. Or am I wrong? I mean, they seem to be.
No, absolutely.
I mean, they don't seem to serve any purpose except to drain the economy from where they're at. If they're located in Saudi Arabia or China or India or wherever they're at, whatever country, it just has this very negative impact on their local economy. Why would you want that?
Well, you wouldn't.
Exactly. So, Yankee, go home.
Well, it was funny because a good friend of mine spends a lot of time looking at economic charts, and yesterday he was looking at the foreign reserves of various countries, and you can get the graphs on the World Bank website. And between 2000 and 2014, all these big countries, you fill in any country, and their reserves exploded between 2000 and 2014. And then in 2014, their reserves did an upside down U-turn and headed south. Mm-hmm. And the bulk of that is unloading treasuries. They're unloading their dollars. I mean, in China, has basically come out in the past and said they politically put political correctness on it by saying they're diversifying their foreign reserves, which means they're selling treasuries. And our discussion turned to, well, where are all these treasuries ending up? And I think it's been ending up in the network of Federal Reserve banks and on their balance sheet. And a lot of people are attributing the sell-off in the bond market in the U.S. either to the election or to the fact that they think Yellen's going to raise interest rates in December, which she's not. Higher rates at least higher treasury rates are attributable to the fact that the rest of the world's selling them and there's only one buyer, and that would be U.S. financial entities. And I think they're starting to run it at their capacity constraint to take on more at these levels. So I think interest rates are going to go a lot higher here. And it has to do with the rest of the world saying, no mas to treasuries. And if Trump executes his agenda, it's going to mean there's going to be a whole heck of a lot more treasuries coming their way.
Which means that we're going to experience a whole lot more inflation than we're currently experiencing.
Well, yeah. I mean, again, people throw the term inflation loosely around. I mean, we've already had massive inflation. I mean,
yes.
if you define inflation in terms of, which is the economic definition, the devaluation of the currency. I mean, if you look at, in 1981, where I went to school, the tuition was $9,000. And now the tuition is $60,000. That's a product of currency devaluation. It's not like the education's any better. Same education.
Right.
Same product.
Same house. I mean, you can look
it's just up. Gone up over 600% in price. Same thing with a car.
And houses.
Houses, right.
House didn't change. That's what I was explaining to a friend of mine yesterday. Because she was like, your house is worth a lot more money today. And it's like, I'm not excited because it's just a representation of inflation. Not just
That's
inflation,
right.
but massive
it's really dollar
inflation.
Devaluation.
Yes, exactly. That's an even harder concept to get most people to understand, though.
Well, they don't understand it. If they have cash in their pocket and they can spend it, everything's great.
It's all good.
Right. And, some of the things have kind of stayed the same, like, produce, boxes of cereal. Well, cereal's up. Cereal's more expensive than it was last year. So is milk.
Yes.
And it's not a supply and demand function. It's a function of the dollar being devalued. It's when you print more dollars and you use those dollars to buy goods and services, and the supply of goods and services stay largely the same, the price is going to go up.
Because there's
unless
more
it's electronics,
dollars.
Which everyone's stuffed to the gills on anyway, and those prices go down. It has nothing to do with technology.
Can't eat iPads.
Right. Speaking of which, I mean, now they're, if you go and sign up for the right phone service, you get a free iPhone.
or Samsung. Samsung's jumped on that train also.
Oh, they did? Shoot, I guess
Yep.
I got my Samsung a little bit too soon, but I only spent $150 and it does everything an iPhone does.
Yeah, that's what
except for FaceTime.
Oh man, you got to take it back. No FaceTime.
Well, I got something on there called video calling, so it's probably the same thing.
Video calling, FaceTime, Skype, whatever. Same horse, different jockey.
Yeah, you want FaceTime? Here, I got Skype on my phone. Call me on Skype. I'll show you my ugly face.
Oh, no thanks. I've seen it. Oh, my Lord. I'm sorry, Dave.
One last thing that I just wanted to put out there, unless you have some more stuff to chat about, is the housing starts number today was released, and the Census Bureau is telling us it was up 25%, and that's it, or 30%, whatever the number was. It's idiotic, and there's no way it's even remotely accurate. D.H. Horton reported their numbers last week, and they missed their estimates. They warned about slowing growth, and every single home builder that I look at, and listeners can go and pull up the 10Qs and look for themselves, have record all-time high inventory sitting on their balance sheet. I can guarantee you they're not out there making the decision to start more homes when they already have a boatload of finished product sitting in their inventories. And this is in the face of mortgage rates, which have just jumped up 15% in the last week. And
15% or 15 points?
Well, the 15%, they went up basically 50 basis points, which was about a 14% jump. But
okay.
We saw the immediate effects of that when the mortgage applications report. And again, that's a massaged, phony number, but mortgage applications week to week dropped 30%. And I know that I'm sure there were a lot of mortgages, especially refinancings, that were in process that all of a sudden got shot down because they were approved predicated on a very low mortgage rate. And when the mortgage rate jumps up 50 basis points, it probably knocked a lot of people out of the system. So it's going to have, I mean, everything is financed so tightly now in terms of the credit statistics that a 0.5% jump in mortgage rates is going to have an extremely profound effect on the housing market. So I guarantee you the home builders weren't out there saying, oh, it's time to add more supply.
Probably not. I don't see it. I mean, looking out my window, I don't see that. I don't see a 25% increase at all.
Well, when you say the market's slowing down in some areas, it's literally collapsing. Like Miami,
yes.
New York City is reports I've been reading about New York City that's taken a U-turn, and foreclosures jumped from September to October by a significant amount across the country, something like 27%. In some areas, it was way higher, like Colorado. Foreclosures were up 64%. So that's going to be another source of inventory that'll hit the market.
Wow, that's a huge jump, 64% increase. And Denver was one of those problem childs from 2000 and 2007, 2008.
Well, Denver led the pack in foreclosures the first time around in the big bubble. It was in the top 5 in foreclosures before the rest of the country really felt the foreclosure problem. So if history repeats there, as goes Denver in the housing market, so goes the rest of the country.
I'm not seeing a 25% increase here at all. As a matter of fact, I see it more flatlining. Maybe even.
And Nashville's been a hot market.
It has been, and I don't see those same signs at all. I mean, and we've talked about that before. I mean, it's flatlined. I mean, it's still elevated. Don't get me wrong, but it's not growing, and it sure as heck isn't going up 25%.
Well, it's a Census Bureau number, and their numbers have been really, especially with employment and new homes. Their numbers are like, I mean, it looks like the heart monitor of a 90-year-old on amphetamines. I mean, it's one month it's up 20%, the next month it's down 20%. So I mean, their numbers are just they're highly manipulated, and oftentimes their field report or their field people out, collecting data, sometimes they just make up the data.
Might as well. It's a beautiful sunny day. Might as well do my report poolside, as opposed to actually going out and collecting data. Well, Dave, unless you got something else, I think that's probably as good a spot as any to wrap her up.
Yeah, I think so too.
Well, all right. Well, have yourself a good weekend, and I guess we'll pick it up on Monday and see where we stand. Actually,
next week I'll be out of town on vacation.
Oh, that's right. It's Thanksgiving.
Yes. So I guess the Shadow of Truth will take a Thanksgiving break.
Happy holidays, everybody.
I second that.
Well, all right then. I guess we'll pick it up the Monday after Thanksgiving.
That sounds great.
All right, buddy.
I'm sure we'll have a lot to talk about.
Yes, we will.